giving you more information based upon Investopia. I will have this link as well in the description box. So a limit order can be seen by the market, as I mentioned, but a stop order can't until it is triggered. If you want to buy an $80 stock at 79 per share, then your limit order can be seen and they will be filled when sellers are willing to meet that price. A stop order will not be seen by the market and will only be triggered once the stop price has been met or exceeded. So that's the difference between a limit and a stock. A limit, your order can be seen by the market. If the seller wants to meet that price, they will execute it. Whereas a stop order, nobody even knows you want that order to be executed, and it will only be done if the market itself falls to that price or rises to that price, depending upon if it's a buy or a sell. Now, as I mentioned before, there are different levels and different types of orders when you have a stop order. And that's not something I'm talking to you about because that's not what Ally is providing. Different brokerage companies may have those different type of variables based upon what it is, but I'm talking about a regular stop order. And on here, as I mentioned, a normal stop order turns into a traditional market order once the stop price is met or exceeded. A stop order can be set as an entry order as well if you wanted to open a position once the price of a stock is rising. A stop order could be set above the current market price, which turns into a regular market order once your stop price has been met. So for a person buying a stock, say right now you have a penny stock. With Ally, you have to pay a fee for penny stocks I think it's under 250. If you know this company is about to have some kind of a crazy rise in its price, but you don't want to pay that fee, you can put that stop order in to actually initiate that purchase of a market order once it reaches to 75 $3, and then you can reap the benefits of owning the stock at a low amount before it skyrockets. Like, that's the way I look at it when if ever I wanted to do a stop price on a buy order. I hope I'm explaining this a way that you're understanding it. If not, just tell me something in the comments and I can, reply to it there. But also when it comes to a stop order, unlike a limit order where you possibly will have a partial fill or no fill, a stop order avoids the risk of no fills or partial fills. But because it is a market order, you may have your order filled at a price much worse than what you were expecting. For example, I don't know, imagine that you have a stop order at $70 on a stock that you bought for 75 per share. The company reports earnings after the market closes and opens the next day at $60 per share. After disappointing investors, your order will be activated and you can be out of the trade at $60, far below your stop price of 70. So this is where it comes to the duration of your order. If you are choosing, and then when I say duration, let me go to the quick trade. This section right here where it says duration, that's right here when I mentioned earlier about the day or the good to close. So if you have a good to close duration and a stop order, which means it's going to stay open until you physically close it out yourself, this duration good to close will make this order goes into the next day per this example. And when it opens and it's at that price that you want it to be at or below, it will trigger. And that's why, being careful with choosing these different options of day and good to close is very, very important. Because like this scenario, you bought a stock share for $75, you put a stock order in at 70, but then earnings came out, everybody was mad, and then it dropped to $60, but you have a good to close on this stop order and it was initiated at $60, so you definitely lost a lot of money because you had this open versus having it closed out on the actual day that you made it. So just be careful when it comes to those stop orders. All right, ending off this video, we're going to talk about the stop limit, which consists of two prices, a stop price and a limit price. This order type can be used to activate a limit order to buy or sell a security once a specific stop price has been met. So, for example, imagine you purchase shares at $100 and expect the stock to rise. Okay? You could place a stop limit order to sell the shares if your forecast was wrong. If you set the stock price if you set the stop price at $90 and the limit price as $90.50, the order will be activated if the stock price trades at 90 or worse. However, a limit order will be filled only if the limit price you selected is available in the market. If the stock drops overnight to 89 per share, that is below your stop price, so that the order will be activated, but it will not be filled immediately because there are no buyers at your limit price of $90.50 per share. So the stock price and the limit price can be the same in this order scenario. So if you are like, what did you just say? Let me just explain it a little bit better. All right, so I'm going to show you a real world example of a buy stop limit with Kohl's. So coming over here to quick trade, I'm going to make sure Kohl's ticker is up here, KSS, and then I'm going to come down to the action of buy, quantity 10, doesn't matter. Order type, I'm going to go to stop limit. And then we have these two prices right here. I'm going to just leave it there and I'm going to show you what's going to happen. You automatically get this red thing here says you are placing a stop order on the wrong side of the market by either purchasing at a price below the current asking price or selling. We're not doing selling, so that first line only pertains to us. And what that means is currently it is going for $40.64, and we're basically putting a stop and limit price at a price that's less than what the market actually is going for. So we need to adjust this. I'm going to just go to $40.90, which basically means I'm putting the wrong figures over here into this limit order. So I'm going to go to $40.90. So now it went through. So basically what I'm telling them once again is that I am willing to pay $40.90, but I'm not doing any more than that. So if it doesn't hit $40.90 by the end of the day, this is not going to be executed. All the money that I would need to have, which is $409, will come back into my account to be used for another trade tomorrow. So let's go to the opposite side for sell. And once again, by placing a buy stop limit order, we are telling the market, aka Allie, to buy shares if the trade price reaches or exceeds our stop price, which is $40.90, but only if you can pay a certain dollar amount or less per share. Now, when it comes to a sell stop limit, it represents a limit order to sell if the price of my current stock falls down to or down through the stock price I'm going to put here. So selling a stop limit order involves two prices, as you already know, a stop price and a limit order to sell. And the stop price, which activates the limit order to sell, and the limit price, which specifies the lowest price per share I or you are willing to accept from a buyer. By placing a sell stop limit order, we are telling Allie, hey, sell this share if the price decreases to our stop price or below, but only if we can earn a certain dollar amount or more per share. However, since there's a chance that the limit order to sell might not get executed, we have to consider if we should even do the stop limit order, because in order for it to be an effective way, we need to make sure we're able to manage our risk on selling. Now, opposite the buy sell order, when we enter a sell stop order, we need to make sure that both the stop price and the limit price are below the current bid price, which is this number right here. Otherwise, the order could be triggered immediately. So here's what happens. A stop limit order automatically triggers a limit order if and when the stock's price reaches a specified amount. If when we're trading, priority is a guaranteed price, then this can be a useful tool. Understanding the risks when it comes to this type of trade is something that's good as well, because just like a limit, we do run the risk of having partial fills and also no executions, which is not a good thing. We definitely want to capitalize on this type of trading option. So here goes a real world example of a stop limit sell. Also understand that there is no guarantee that this order will be executed. So many people who are really, really familiar with this type of trade don't consider it to be effective to manage risk. So just make sure you are choosing the right one based upon what you are looking to do. And I actually contacted Allie's customer service, and they explained to me a little bit more in detail about the two, and that's why I only use the stop. I don't use stop limit. I don't need any extra executions needed for me to make sure my money is saved. So a stop for me when it comes to selling is what I use all the time. Personally is what I use. So here's the real example. We're gonna go over here. It's a quick trade, and we're going to follow the actual stock I currently own, which is QQQJ. All right, so we're going to make sure all that is over there. Perfect. Actions, I'm going to go to sell. Quantity, I'm just going to do 1. Order type, sell limit. And then right here you see both of these prices are above the bid price. And remember, we have to make sure they are below the actual bid price. So I'm going to go to $30.70 and see if Allie likes these figures. I'm going to keep it at duration for the day, which again means at the end of the day, if this is not reached, this order is canceled, and I get to try to do something different tomorrow. I'm going to click on preview order, and here we have it. My estimated sale proceeds will be $30.07. The fee will be 1 cent, so I will receive $30.69 if I were to execute this actual trade here. So yeah, this is like literally what you would need to do for a sell stop limit. But again, I don't like all these extra, steps. I like simplicity. One thing. So I would prefer, for me, I only stick to just stop, because if I just purchase this stock and I'm not too sure what's going to transpire, I know probably in a couple of days I want to use the money I purchased this for something else, I would put a stop price for $30.70 only for the day. And then I would click on preview order. And then it will say, okay, well, you'll receive this much once it falls, or if it falls. Hopefully it doesn't. It rises up. And then I can go and do a quick sell of this stock to capitalize on those gains. So I hope this video helps you out. I try to explain it to the best of my ability with giving you information from both um, Investopia and the other website, which again, I do have those links in the description box. So any questions, feel free to ask me. You can also go to the Balance or the Investopia website links to get more of an understanding and clarifying understanding of what's happening, because they go a little bit more in depth with information that will not even pertain to you. And I don't want you to get confused, because it is so much to investing, but we're just doing simple stops, simple sells, simple limits. So you don't want to get so confused that something that doesn't pertain to you clouds what you just understood to be, I guess, a little bit of understanding for these different order types that Allie actually have. Thanks for watching. Have a good one.